In today's lecture, we are going to discuss the RTP of May 2026. So we'll see May 26 ka RTP. So this is your RTP for May 26, and in this, first we are discussing the case scenario question and what is the approach that I told you. First we need to see the MCQs. So we'll go to the MCQs. They have given something and we will go to the MCQs. First one, based on the facts of the case scenario given above, choose the most appropriate answer to question number 1 to 6. Which of the following activities are transactions undertaken by CIL, that is one company, do not amount to supply? So there is one question related to whether the said activity is supply or not a supply. So do not amount to supply is one question. Then GST payable on smartwatches supplied along with extended warranty. So there is sale of smartwatches with extended warranty, and what is the GST payable? That is one question. Next, third one, GST payable on extended warranty offered for sales effected in September is. So for that extended warranty in September, what is the GST payable? GST payable on spare parts replenishment by CIL to its distributors for replacement of parts by the distributors to customers under warranty. So replenishment of spare parts. So this is a question related to replacement during warranty period. So spare parts replenished, what is the GST payable, like that they have asked. Then amount of ITC admissible to CIL for October, place of supply for goods in territorial waters, and tax payable on the same is. These are the 6 questions. So there is one question related to supply or not a supply, GST payable only mostly they have given, and ITC, and finally place of supply in case of territorial waters. Now we will start reading the question. Carbon Light Industries is a supplier registered under GST in Ahmedabad, Gujarat. It is engaged in manufacture of smartwatches and supply of various other goods and services. The smartwatches are supplied with a standard warranty period of 1 year. So standard warranty 1 year, and there is some external warranty, optional extended warranty for a further period of 6 months under separate agreement, okay, entered into with various customers for smartwatches sold through its distributor. So there is one standard warranty as well as optional warranty. Extended warranty is effective after expiry of original warranty which has been provided at the time of actual sale of smartwatches. It provides the details of various activities undertaken by it during the month of October as follows. So what is that? First, this is for the month of October. There is some questions related to October month. Outward supply of smartwatches with standard warranty period of 1 year to various distributors during the month. So watches with standard warranty, it's normal supply, composite supply, naturally bundled in the ordinary course of business, and will take the rate of principal supply. So smartwatch rate will be applicable in this case. So on this 50 lakhs, what is the rate of GST? Here they have given rates of GST are 9%, 9% and 18% respectively for both inward and outward supply, except warranty service, for which the rate of GST is 2.5, 2.5 and 5. But here, so watch with standard warranty is a composite supply and the principal supply is watch. So therefore this 50 lakhs will be taxable at the rate of 18%. So GST at the rate of 18% will be applicable in this case. And it is within Gujarat. Where is this person located? CIL is located in Ahmedabad, Gujarat. Therefore first case, it is intrastate supply, CGST, SGST, and next case it will be IGST because it is outside Gujarat, okay, outside Gujarat. Accordingly the liability will change. Next, amount received by CIL for extended warranty. So within Gujarat, outside Gujarat, for sales affected during the month of October, for sales affected during the month of September. So whenever the sales are happening in the month of September, for which they gave the warranty now, and for sales affected during the month of October also, there is some extended warranty that is mentioned. Then next, cost of spare parts replenished by CIL. So they do the replenishment to its distributors through delivery channel without separately charging any consideration for replacement of parts by the distributors to customers under warranty. Is it supply or not a supply? It is not a supply. Why it is not a supply? Because replenishment of warranty, replenishment of parts during warranty is not treated as supply, and we don't have to reverse any proportionate ITC, and the catch is that it is under the cover of a delivery channel. That's why it is not a supply. And details of inward supply, that is CAL can take ITC. For these parts which they are replenishing, they can take ITC. But this particular transaction is not a supply. Okay. Then raw material, we have some inward supply details. Raw material imported from Germany. On import of raw material, value of goods was worked out by the customs authorities as 10 lakhs for the purpose of levy of IGST. So on this 10 lakhs, we can take ITC. We can take ITC on that 10 lakhs. That is a value for the purpose of levy of IGST. And also remember, this will come under RCM liability. So imports, IGST paid, but it is under customs. Then next, debit note received from a distributor registered in state of Karnataka for providing repair services on 2nd October as a part of warranty to one of the customers on behalf of CAL. No consideration was charged from customer for the same. Date of issuance of debit note for repairs was 25th October and payment was made by CAL on the same day. What is this debit note concept? That is, you are manufacturer, you are appointing me as distributor, and what I will do, I have to do the free after sale service on the goods which are sold, and I do the free after sale service and I will not charge anything from the customer. Is it really free? No, it is not really free, because I will be recovering that money from you, because actually you have to do the repairs and maintenance or free after sale service which I am doing as a distributor. As I am doing it and in turn recovering it from you, so definitely, so which means that I will raise invoice to you and I will recover money from you. I will pay GST, which you can take as ITC. Rather than raising invoice, I am just giving you a debit note. Same logic, ITC will be available. There is no restriction on ITC to CIL. And purchase of goods on 21st September from Messrs. Prathognya LLP registered in Tamil Nadu and filing monthly GSTR1. Messrs. Prathognya has filed its form GSTR1 of the month of September on 15th October. As GSTR1 is not filed within the due date. What is the due date of filing GSTR1? 11th of the month following every month. But here they are filing it on 15th October beyond the due date. Will it be reflected in 2B or not reflected in 2B? So it is not reflected in 2B. As it is not reflected in GSTR 2B, whether ITC is available or ITC not available. So ITC is not available in this case. Intrastate purchase of manufacturing machines sent directly to job workers premises under a delivery challan. So they are making some purchases, and that is sent directly to job workers premises. Can they take ITC? Yes, we have a concept of deemed delivery. Whenever the goods are procured and sent for job work, so when the goods are received by the job worker, it is deemed that the principal has received the goods and they can take ITC with respect to this. So ITC is available. The company provided the following additional information for the month of October. CIL took delivery of the raw material imported from Germany from Kandla Port, Gujarat on 13th October after payment of applicable customs duty and social welfare surcharge. So IGST credit will be taken in this case. Okay. And CIL supplied taxable goods in the territorial waters to Innomec builders for 6 lakhs. So they are making some supply, outward supply. This is outward supply, and outward supply to a person in territorial waters. Territorial waters is located at a distance of 12 nautical miles from the baseline of Kerala and 15 nautical miles from the baseline of Tamil Nadu. So as per section 9 of IGST Act, what will be taken as the place of supply? Place of supply will be nearest coastal state. What is that nearest coastal state? Kerala will be taken as the place of supply in case of supply in territorial waters. And if place of supply is Kerala, what is the location of supplier? CIL is in Gujarat. Therefore, it is interstate supply chargeable to IGST. So we have one question, last MCQ related to this, that is MCQ 6. So for MCQ 6, what will be taken? Kerala will be taken as the place of supply, and accordingly IGST will be applicable. Option B is the answer. Okay, one direct MCQ. Next, CIL, because 6 lakhs into 18%, 1,08,000. CIL supplied solar panels used in the business purpose on which no ITC has been taken yet, given free of cost to an unrelated person based in Gujarat. As they have not taken ITC, on which ITC is not available, disposal of business asset on which ITC is not available, so it is not a supply. It is not a supply because ITC is not availed on this. Purchased 2 years back at a price of 1,12,100, including GST, open market value is 75,000, irrelevant. CIL supplied molds and dies owned by it to unrelated component manufacturer, free of cost. In October, market value of the same was 3,30,000, again not a supply. Why? So when molds and dies are sent to the component manufacturer free of cost, so we don't have, and moreover it is not permanent transfer or disposal because those molds and dies will be returned. So due to that reason it will not become supply. We have a CBSE circular in this regard. CIL provided free training on sales and customer engagement skills. Free training they did to all its agents free of cost. No need to read further. It is not a supply. Why? Principal agent transaction will become supply under 7(1)(c) only if it is in the context of goods. Here it is not in the context of goods. So due to that reason it will not become supply. So they are giving free training on sales and customer engagement skills to all its agents. All its agents free of cost in October. Cost of such training was 1,80,000 rupees. So not a supply because it is not related to goods. Opening balance of ITC is given, that will go to the third statement, that is ITC statement. All figures exclusive of GST wherever applicable except stated otherwise, subject to the information given above. All other conditions for claiming ITC comply. So we have the first question, which of the transactions undertaken by CIL, that is outward supplies of CIL or outward transactions of CIL, do not amount to supply. Supply of taxable goods in territorial waters, that is supply. That is supply. Solar panels for being used in business purpose given free of cost. So that solar panels is not a supply. Supply of molds and dies not a supply. Free of cost training provided to agents is also not a supply. These three are not a supply. So 3, 2, 3 and 4 is not a supply. So option B is the correct answer for this. Then GST payable on smartwatches supplied along with extended warranty offered for sales in October is. So they are asking only smartwatches with extended warranty for the month of October. So sale of smartwatches in the month of October within Gujarat 15 lakhs, outside Gujarat 35 lakhs, correct? And what about the treatment of extended warranty? So is it naturally bundled in the ordinary course of business? No. Is it given anywhere? It is given at the time of supply of these smartwatches? No. No, they have not given. So if it is given at the time of supply of the smartwatches, it will be deemed as composite supply for the extended warranty. At the same time, from the same person. They are not asking about standard warranty, dear. They are not asking about standard warranty. They are asking about additional warranty. Standard warranty is always composite. Okay, always composite, and we don't have any treatment, so which means that we will treat it like taxable at 18%. Okay, and they did not give that additional warranty is 5%. Any warranty is 5%. Any warranty services is 5%. So due to that reason, standard warranty will always be composite supply and the rate will be the same 18%, that will be applicable, no doubt. So now what we need to do? CGST, SGST and IGST. CGST, SGST and IGST. So in that, within Gujarat 15 lakhs. So 1 second. So 15 lakhs into 9%, that is 1,35,000 CGST, then 1,35,000 SGST and IGST 35 lakhs into 18%, 6,30,000. 6,30,000. Okay. And what we need to see is that, so what about the question? The question is, for sales which happens in October along with extended warranty, say this, the question you see, GST payable on smartwatches supplied along with extended warranty offered for sales in October. For sales in October only they are asking. Okay. Yes. For sales in October. So what is the smartwatches for sales affected during the month of October? This is related to October. Now listen, we have a CBIC circular which says that any money collected for the extended warranty, if it is supplied at the same time by the same supplier, we need to treat it as composite supply and it will be taxable at the rate applicable to the product. What is the rate applicable to product? 18%. So on this 1,50,000 also same rate. 1,50,000 into 19%, 9%, 13,500, 13,500, 1,50,000 into 9%, 9%. Then 3 lakhs into 18%, that will be 54,000. So remember, for this the rate will be 18%. But for this, the rate will be 5%. Why? Because if it is at a different time, sales already happened in September, for which they are giving additional warranty now, which means it is a separate transaction taxable independently. So we have a CBIC circular in this regard. Okay. In input tax credit chapter, at the end we have the circular, based on that they have given this. So now, what will be the answer related to this? 1,35,000 plus 13,500, 1,48,500, and next 1,48,500, and finally 6,30,000 plus 54, 6,84,000. So first I will show you that circular. Please try to understand what is that circular about. So look into this. This is from That's It book. In input tax credit chapter it is there. Treatment of extended warranty, page 112, page 112. Amount paid for extended warranty taxable at the same rate applicable to goods if the warranty is taken from the same supplier at the time of purchase of goods. If the amount for extended warranty paid to another supplier, it is treated as separate supply. Okay. If it is to another person, it will be treated as separate supply. Understood? Now, if the amount paid for extended warranty after purchase of goods, then also it is treated as different supply, whether from the same supplier or different supplier. Applying that logic only, I told you that here it is 18%, here it is 5%. So 1,48,500, 1,48,500 and 6,84,000 is the answer. So option B is the answer. Now third question. GST payable on extended warranty offered for sales affected in September. Remember the rate is 5%. The rate is 5%. So therefore 50,000. 50,000 into 2.5% will be 1,250. 1,250 CGST, SGST and IGST will be 1 lakh into 5%, 5,000. So that is a correct option. 1,250, 1,250 and 5,000. See this? Yes, option C is the answer. Got it? Now you understood the provision. Fourth, GST payable on spare parts replenished by CIL to the distributors for replacement nil. Why? It is not a supply. Replenishment of spare parts is not a supply. That also I have given here. You see. Same, where distributor uses his stock for replacement, manufacturer replenishes the stock on which manufacturer can take ITC. Also, where a part or entire product is replaced during warranty, ITC can be availed on the goods purchased for warranty, whether or not any consideration is charged with respect to such warranty repairs. Also, whether it will become supply, no, it will not become any supply. Just because ITC is availed, you should not invoke 7(1)(c). So in this case, section 7(1)(c) not to be invoked. Not to be invoked. What is it? 7(1)(c)? Disposal of business asset on which ITC is availed. It is not a supply. Got it? So due to that reason, Here the GST will be nil. Then amount of ITC admissible to CIL for the month of October. Let's see this ITC, which and all places ITC available. First case, ITC available 10 lakhs into 18%, 1,80,000. So CGST, SGST, IGST. And what is the ITC on raw material imported? Raw material imported, IGST is 1,80,000. Then next. So here we have next one, debit note. For this also we can take ITC. Distributor registered in the state of Karnataka. So 15,000 into 18%, 2,700 on the debit note. Okay. Next. So 4 lakhs intrastate. So 4 lakhs into 9%. So that will be 36,000. 36,000. On that also we can take ITC, that's not an issue. Next. What else? We have opening balance 95, 65, 5,25,000. 95, 65, 5,25,000. Okay. Next, total if you see 1,31,000, 1 lakh, that is 36,000 plus 65,000, 1,01,000, then 1,80,000 plus 2,700 plus 5,25,000, 7,07,700. Okay. Next. So this one you see, GSTR1 for the month of September is filed on 15th October. No ITC for September month, but we can take ITC in October month. Why? If the GSTR1 is filed within the due date, it will be reflected in the GSTR2B of September. No. If it is filed within the due date, it will be reflected, but not filed. So not reflected in the GSTR2B of September, but it will be reflected. It will be reflected in GSTR2B of October. Next month 2B it will be reflected. Then logically we should take ITC. So 2 lakh into 18%, 36,000. So that 36,000 also we can take, plus 7,07,700, 7,43,700, 7,43,700. So 1,31,000, 1,01,000 and 7,43,700. We have option A, 1,31,000, 1,01,000 and 7,43,700. So these are the answers for case scenario 1. Mostly the concept that they have tested is that circular related to warranty, spares, etc. they have made, and in the list of questions, list of areas which are important, I gave you this circular on warranty. Then interest under section 50 is applicable in case of from Patognia due to delay. It is on them now, not on us. As they filed it late, they have to pay, and we don't know whether they reported it in GSTR 3B or not. Even then, if you need to find the interest, it is on them, but we don't know whether they filed 3B on time or not. If they file 3B on time, one they may file late, but 3B they can file on time. So only late fee will be there in that case. So that we don't have. Interest obligation is not on us. Okay. Next, case scenario 2. In this case scenario 2, we have some questions. Determine the value of water cooler supplied in January by Hydrocool Enterprises to Chill Pure traders. There is a question on value of supply. time of supply of the data backup and database access services provided by Apexion Innovation, time of supply. Next, in case of transfer of business to DS, what is the amount of ITC which shall stand transferred to DS? Which of the following statement is correct with respect to incentive paid to employees in the month of March? So they have given some incentives. What is the correct statement? In relation to advance ruling received by Hydrocool Enterprises. So there is one question related to advance ruling. So what is the treatment? That is the questions. Let's read the paragraph. Hydrocool Enterprises, a partnership firm, is a supplier of water coolers located in Kota, Rajasthan, and is duly engaged and registered under GST in the state of Rajasthan. So it is in Rajasthan. It undertakes both intra and interstate supplies in the ordinary course of trade in the month of January. Hydrocool Enterprises supplied water coolers to Chilpur Traders Kerala, an unrelated party, for a total consideration of 2,95,000 inclusive of GST. So 2,95,000 is the transaction value. So the transaction value is 2,95,000, and don't do the adjustment of GST now, make all the adjustments, and finally you need to exclude the GST. In addition to this monetary payment, Chilpur Traders also provided certain materials to Hydrocool Enterprises as an additional consideration. These materials were valued at rupees 10,000 exclusive of GST, which means price is not the sole consideration. There is some other consideration in the form of material. So we need to determine the value under Rule 27. As per value under Rule 27, we need to take the open market value. And these materials were valued at 10,000. At the same time, Hydrocool Enterprises supplied water coolers of the same quality and specifications to another unrelated customer for 2,97,360. That will be taken as OMV. Why value under Rule 27? Because price is not the sole consideration. So transaction value not applicable, we need to take OMV. But as the OMV is inclusive of GST, take out the GST. 2,97,360 into 100 divided by 118. That will be 2,52,000 will be taken. So in this case, 2,52,000 will be taken as the value. Okay, then Hydrocool Enterprise also entered in contractual agreement, blah blah they have given. So the correct answer for the first MCQ, because we have an MCQ, value of supply 2,52,000, unless if there is any other changes, okay, but otherwise this is the answer, 2,52,000. Next, Hydrocool Enterprise also entered into contractual agreement with Apexion Innovations, an information technology service provider, for availing data backup and access services, that is OIDR services. For import of OIDR services, as Hydrocool Enterprises is registered, it will be taxable under RCM, and whenever the service is taxable under RCM, we need to know the time of supply under section 13 subsection 3. As per section 13 subsection 3 of CGST Act, if the invoice is raised by the supplier to recipient, the date on which payment is made to supplier, or 61st day from the date of invoice raised by the supplier, whichever is earlier. If the invoice is not raised by the supplier, but the invoice is raised by the recipient to supplier, the date on which payment is made to supplier, or the date on which invoice is raised to supplier, that is self-invoice to supplier, whichever is earlier will be taken. In this case, Apexion Innovation raised an invoice on Hydrocool Enterprises for data backup and access services. So date of invoice is raised by the supplier plus 61st day. What is 61st day from the date of invoice? So 21st February, 28 minus 21, we have 7 days in February, 31 days in March, and minus 61, April 23. So 23rd April will be taken as 61st day. They issued and dispatched a demand draft as payment. Demand draft was received and recorded in the books of Apexion. Apexion Innovation encashed the demand draft and they provided the access. So date of entry in the recipient books or date of debit in their bank account. So when it got debited in their bank account, it got debited on 3rd March because they encashed on 3rd March, but entry is in 28th February. But demand draft was received and recorded in the books of Apexion. What we need is in the books of Hydrocool. Hydrocool issued and dispatched a demand draft as payment. So we don't know when it got entered in their books of accounts. We don't know when it got entered in their books of accounts. But what is the date on which debit that has happened? So the debit, see here, logically simple here. Debit will happen on 3rd March whenever they encash. So 3rd March, whichever is earlier will be taken as the time of supply, correct? The date on which, that is the date on which payment is made, or 61st day from the date of invoice, whichever is earlier, because they entered into contractual agreement for availing data backup and database access and retrieval services. The details of the service availed are as follows. This up to this, but there is a twist. In meanwhile, the rate of GST, wait, I'll come back to this. In the meanwhile, the rate of GST is changed from existing 18% to 5% from 1st March. Okay. Now, because of this one line, completely the discussion what we have made will change. Why? The moment when there is a change in rate, section 14 will come into picture and this 13 will not be applicable. 13 will not be applicable. Why? Because section 14 will prevail. And what does section 14 says? If the supply is before change in rate. Okay, is the supply before change in rate? Yes, because they received the services on 4th March. No, the change in rate 1st March. Supply after change in rate. If the supply is after change in rate and the payment is before change in rate and invoice also before change in rate, correct? Supply alone after change in rate and the payment is after change in rate and the invoice is before change in rate. Okay, so then what should be taken? Here, what is the meaning of payment? That also will change. So, payment means if the payment is credited within 4 working days from the change in rate, then date of entry or date of credit, whichever is earlier. If the payment is not created within 4 working days from the change in rate, then we need to take date of credit only should be taken. So here if you observe whether the payment got created within 4 working days, yes, 1st March, 3rd March, the payment got created within 4 working days. So we need to see date of entry in their books or date of credit in their bank account, whichever is earlier. In whose bank account? Supplier bank accounts. So date of entry in the books of supplier will be 28 February, and date of credit in their bank account will be 3rd March. Okay. So we need to take date of invoice or date of payment, whichever is earlier or whichever is later will change. Depends. Wait. Whichever is earlier or whichever is later will change. What is the date of invoice? 21st February. What is the date of payment? Whichever is earlier between 28th February or 3rd March, whichever is earlier, that is 28th February. As both invoice and payment before change in rate. First, again I am repeating, section 13 will not be applicable, section 14 will be applicable. As per section 14, what should be taken? We should take date of invoice or date of payment, whichever is earlier one provision is there, whichever is later one provision is there. If both invoice and payment is before change in rate, whichever is earlier. If one before, one after, whichever is later. So please see this. There is a provision for time of supply in case of change in rate of tax. So what does it say? So in that, if completion is before change in rate, then whichever is earlier. If completion is after change in rate, so both invoice and payment before change in rate, whichever is earlier. One before, one after, whichever is later, which is in page number 70. So accordingly, we are applying this logic. So we are taking date of invoice 21st February, date of payment. What is date of payment? As the payment got created within 4 working days from the change in rate, Entry date or credit date, whichever is earlier. So therefore 28th February will be taken as both invoice and payment before change in rate. The time of supply will be whichever is earlier. So 21st February will be taken as the time of supply. So the time of supply for this transaction is 21st February. That is the correct answer. Okay. So it's a very good question. Pretty much they have laid down a trap to apply section 13. So then why you discuss section 13, sir? Because if I discuss directly section 14, you will get a doubt as to why I have not touched section 13. And that's the reason why I am touching section 13, and then I am telling why it will not satisfy, and that's why we are moving on to section 14. Okay. So this is what it is. Next. Sir, in case 1, can we avail ITC on goods used for replenishment? Yes, we can take, but we don't have any information related to that. Goods purchased for replenishment. We don't have the details of ITC, whether it is purchased during this month or not. We don't have the data. So due to that reason, we are not taking. But suppose if that line is given, that is material purchased or goods purchased for replenishment, we can take ITC on that. Fine. Here time of supply is over. That's a very good concept that they have tested. They have thought a lot and they have made a question on this. In February, Hydrocool Enterprises got a favorable advance ruling order on a particular issue from Authority for Advanced Ruling, Rajasthan. The application was filed by Hydrocool Enterprises through its registered place of business in Rajasthan. So they got a favorable advance ruling on a particular issue in Rajasthan. The application was filed by Hydrocool Enterprises. In the month of March, as the financial year drew to a close, Hydrocool Enterprise launched a special performance linked incentive scheme to motivate its sales team. So related to this paragraph, there is one MCQ, that is advance ruling question. See this, they have given in relation to advance ruling 11, the advance ruling order is binding on Hydrocool Enterprise only in Rajasthan but on jurisdictional officers across all registrations. So only in Rajasthan but on jurisdictional officers across all registrations of the firm in India. Is it true or false? Definitely it is false. It is binding on them only in Rajasthan, that too on the jurisdictional officer in Rajasthan. The order is binding on Hydrocool Enterprise across all states in India. False. The order is binding on Hydrocool Enterprises and the jurisdictional officer in Rajasthan. True. See, the order is binding only on that jurisdictional officer and that person in that state. And the order is binding on Hydrocool Enterprises and the jurisdictional officers across all registrations of the firm in India. False. So option C is the correct answer. Then next, in the month of March, as the financial year drew to a close, Hydrocool Enterprise launched a special linked incentive scheme, performance linked incentive scheme to motivate its sales team. Under the scheme, each employee who achieved the targeted sales milestone was rewarded with a total incentive payment of 75,000. So there is an incentive of 75,000. The incentive was part of employee's salary structure, formed part of employment remuneration, and was subject to applicable TDS under Income Tax Act. Okay. So now, what is the question related to this? Related to this, they gave, which of the following statement is correct in respect of incentive paid to employees? So GST is payable on the incentive since the incentive is linked to sales performance and constitutes consideration for supply of service by employee. False. Because this incentive is like a salary only, na? Part and parcel of employee's salary structure. And moreover, it was subject to applicable TDS, means TDS 192 would have been deducted. Okay. So therefore, this will not be subject to any GST because it form part of salary. Then B, GST payable on incentive? No. Since activities are not covered, GST is not payable on incentives, it is covered under Schedule 3. True. Because it will come under salary, forms part of salary, employee to employer in the course of employment. That is the correct answer. Then next, one last paragraph is there. Hydrocool Enterprises intended to transfer the business as a going concern through Drew and Sons on 31st March as per the terms of the transfer, Hydrocool Enterprises will transfer all the business assets worth 15 lakhs and all the liabilities. There is both transfer of assets and liabilities. As there is both transfer of assets and liabilities, can they transfer the ITC? Very much yes. The ITC can be transferred as per 18 subsection 3. So in case of transfer of business, what is the amount of ITC? 40,000 can be transferred. Nil in case of partnership firm, ITC cannot be transferred. Wrong. As value of liabilities is more than assets. Wrong. Whenever there is a transfer of business with specific provision for transfer of liabilities, as per section 18 subsection 3, ITC can be transferred from the electronic rate ledger of the transferor to the electronic rate ledger of the transferee. That is the answer for this. Next, question number 12. So we completed all the questions now. Yes. 7, 8, 9, 10, 11 over 12. Bharti company imported goods valued 10 lakhs via a bill of entry presented before the proper officer on 15 July, on which date the rate of customs duty was 20%. Bill of entry 15 July. The proper officer decided that this good should be subject to chemical or other test, and therefore the same were provisionally assessed at a value of rupees 10 lakhs, and Bharti company paid provisional duty of 2 lakhs on the same day. Provisional duty they paid. Bharti company voluntarily wants to pay the duty of 1,50,000 on 20th August. The amount of interest payable under section 18 is dash, assuming the payment of 1,50,000 made on 20th August and that the final duty assessed on 31st August is 4 lakhs and the balance duty is paid on the same day. So there are two interest computation here. So what is the provisional duty? That is, final duty is how much? The final duty, final assessment order is 4 lakhs. Final duty assessed is 4 lakhs. And what is the provisional duty? Provisional assessment order is 2 lakhs. So what is the differential amount? The differential amount will be 2 lakhs. How the differential amount is paid? There are two. First one, which is paid on 1,50,000. 1,50,000 paid on 1,50,000 is paid on 20th August. 1,50,000 is paid on 20th August. What will be taken for 1,50,000 paid on 20th August? We need to see first the date, first date of the month in which provisional assessment order is passed. So presented 15 July, chemical test, and 15 July. So which means from 1st July to when this 1,50,000 is paid, 20th August. 20th August. How many days? How many days? So count 1st July also. July 31 days and August 20 days, that is 51 days. For that 51 days, what is the interest? What is the interest that will be payable? 1,50,000 into 15%. Be careful, customs. It is customs. 15% into 51 divided by 365. That is 3,143.8, 144. Now hold on. There is another interest. That another interest is on 50,000. So this 50,000 is paid on 31st August. Then we need to count interest from 1st July to 31st August. That is how many days? July 31 days, August 31 days. 62 days we need to pay interest. And what will be the interest in this case? So first we need to take 50,000 into rate of interest 15%, 7,500 into 62 divided by 365. So 1,273.9, 1,274 plus 3,144, 4,418. Option D is the correct answer. 4,418. Okay, clear? And please make use of your answer sheet last few pages for writing all this. Please don't do your calculations in the air. For every MCQ, please do it in the answer sheet at the last few pages. You scribble and thereafter you strike off and mention it as rough work. It's okay. Fine, got it. End of the day, you should clear the exam. That's the target. Under rule 41, transfer of assets, should I need to take the assets as gross assets or net assets? So the value of net assets means total assets minus ITC, not minus liabilities. Total assets minus, that too in case of demerger. But here we are not doing demerger. So therefore we don't have to do any apportionment. Okay. And what is the meaning of net assets? Net assets means total assets minus ITC. That's it. Not minus liabilities. Okay. Then 13th question. This 13th question is related to computation of net GST payable. And for this computation of net GST payable, what is that I told you? So we have lot of outward supplies and inward supplies and other additional information. And we have minimum net GST payable. This is your 14 marks question. For that, we need to prepare the answer in a particular format. So that particular format we will do. What is that? First we need to do? We need to prepare computation of gross GST payable on outward supplies. So first statement number 1, computation of gross GST payable on outward supplies under FCM. That's the first statement we need to prepare, and accordingly format particulars, then value, CGST, SGST, IGST. Okay. Actually speaking, this particulars column only should be half of the page. Remaining half of the page will be value, CGST, SGST. And next, once you prepare this table, all the outward supply details we will be mentioning here, along with the computation of CGST, SGST and IGST. Okay. Then next, second. After this, what is the second statement? Computation of GST payable on inward supply under RCM. So we might have some inward supplies. So computation. So first page and second page will be this. First statement, first page, second page, because we need to write the note also. Then third page, computation of GST payable on inward supplies under RCM. Inward supplies under RCM. This is second statement. Next, after this, the third statement, computation of input tax credit availed, reversed and net ITC available for utilization. Computation of ITC availed, first availed, comma ITC reversed and net eligible ITC for utilization. Net eligible ITC for utilization. Okay. Computation of ITC availed, ITC reversed and net eligible ITC for utilization. Now this is what we need to prepare. In that, first, outward supply, information technology services provided to unrelated clients located in foreign countries. In all cases, the consideration has been received in convertible foreign exchange. For information technology services, the general provisions will be applicable and place of supply will be location of recipient, that is outside India. Supplier in India, recipient outside India, place of supply outside India, consideration is in convertible foreign exchange, supplier and recipient are not to establishments of the same person. So all the conditions are satisfied, it will become export of services. When it becomes export of services, we need to know whether they are going for with payment of IGST or without payment of IGST. So here the company has provided the additional information. You see, there was no opening balance and nothing is given. So under bond, the amount given above exclusive of taxes, no inward, there was no balance of any ITC. And yes, so what we are doing, we are definitely going for without payment of IGST. Okay, so we will put it that it is exported under bond or LUT without payment of IGST, like that. Because I told you in case of services, definitely given a choice, no one will be required to pay GST. So you can take the assumption. So here the assumption that you need to write is that the service is exported without payment of IGST under bond or LUT. Therefore, consequently, the IGST payable will be nil. So information technology services. Information technology services. Information technology services exported, and take the value. The value is how much? The value is somewhere 20 lakhs, and IGST assumed to be supplied under bond or LUT. Assumed to be supplied under bond or LUT without payment of IGST. Next. Then, sir, for date of payment in time of supply, whether we should take date of credit or entry in books, whichever is earlier in section 12 and 13.2, or restricted only for section 14. Date of, always it is date of credit or date of entry in the bank account, whichever is date of entry or date of credit in the bank account, whichever is earlier. This is everywhere, 12 or 13 or 14. But for 14, we have one special point. If the payment is created within 4 working days from the change in rate only, we need to take that. If the payment is not created within 4 working days, then we need to take date of credit in the bank account only as the date of payment. Okay. Then, next one, after this, the second transaction, supplied 50 Bluetooth speakers at Hyderabad to the state government of Telangana. And where is that this entity is located? Maharashtra. Charging cables mandatorily required for charging the Bluetooth speakers were also supplied along with these speakers. Mandatorily required means naturally bundled. Okay. And here, do we have any information about the rates? Rate of CGST, SGST 9%, 9%, 18% respectively for both inward and outward, except for charging cable, the rate is 5%. But these two are naturally bundled in the ordinary course of business, and the principal supply is Bluetooth speakers. So the rate of GST will be 18% in this case, and here it is supply of goods. So what will be taken as the place of supply? So we will be taking it as, so ending point, because state government of Telangana is given. So Hyderabad, Telangana will be taken, and it is interstate supply chargeable to IGST. And on entire 8,72,000 we will take 18%. Okay. On entire 8,72,000 we will take 18%. Sale of Bluetooth speakers. Sale of Bluetooth speakers. 8,72,000 and into 18%. CGST, SGST will not come. IGST 8,72,000 into 18%. 1,56,960. 1,56,960 will be taken. Next, third transaction. Provided intrastate service as district selling agent, as a direct selling agent. So intrastate service as direct selling agent to Ujjwal Growth Small Finance Bank for their retail loan products. Direct selling agent service taxable. We don't have any exemption, but we need to check whether it is covered under FCM or RCM. If direct selling agent is an individual or firm, then it will be covered under RCM. But if the direct selling agent is other than individual or firm, that is, if it is like, individual, firm or body corporate, if the direct selling agent is firm or body corporate, it is FCM. If the direct selling agent is other than firm or body corporate, it will be RCM. But here the direct selling agent is body corporate. As the direct selling agent is body corporate, it will be RCM. Okay. So it will be taxable in the hands of recipient, correct? And so, but if the direct selling agent is body corporate, it will be FCM. If the direct selling agent is other than body corporate or firm, then it will be RCM. So direct selling agent services, direct selling agent services. How much is the value? 3,80,000. It will be FCM, taxable under FCM. Keep that in mind. Because the supplier is not, others. Supplier will be body corporate or firm for that reason. And next, what is the type of supply? Intrastate. So CGST, SGST, 3,80,000 into 9%, 34,200 and 34,200. Next, passenger transportation services. Passenger transportation services. So for passenger transportation services, the next one, provided to tourists by a company owned ferries between two islands in the state of Maharashtra for tourism purpose. See, two islands for tourism purpose, definitely this will be taxable because transportation of passengers by vessel, okay, two islands means definitely it will be vessel, but for tourism purpose, therefore it will be taxable 1,20,000 and in the state of Maharashtra. So they are also located in Maharashtra, so it is intrastate supply. So it is how much? 1,20,000 into 9%, that is 10,800 and 10,800. What's next? Supplied goods to its agent in the state of Bihar, to its agent. Open market value of the said goods were 3 lakhs. The said agent is supplying goods of like kind and quality to his unrelated customer at 3,20,000. So as per rule 29, we need to take open market value or 90% of the resale price at which agent is giving to the unrelated buyer. So 3,20,000 into 90%, 2,88,000. So we will take 2,88,000. And it is in the state of Bihar, therefore it is interstate supply. Supply to agent, but we will take 2,88,000. Keep that in mind, that is value under rule 29. So 2,88,000 into IGST 18%, 51,840 will be taken. So that's the answer. Next, we have inward supply data. Purchased silk yarn to be used as raw material from Mr. Subhash, who manufactures silk yarn from raw silk. Mr. Subhash is registered in the state of Maharashtra. So that is sale of silk yarn by a silk yarn manufacturer to a registered person. Here silk yarn manufacturer and silk yarn manufacturer to a registered person, and this person who is purchasing, it is Earthovia, a registered entity. So it will be inward supply under RCM. Okay, this is taxable under RCM. Purchase of silk yarn 4 lakhs, and where is it purchased? Maharashtra, so within the state. So we need to take it under GST payable on inward supply under RCM. Particulars, then CGST, SGST, IGST. So transportation of passenger through ferries, if place of supply is given, should I check general provisions or hiring of? First of all, here it is section 13 not applicable. It is in India. So why there will be section 13? That is for section 13 only. Any one in India and the other outside India. So the two transportation of passengers, hiring will not come. When it is given as transportation only. No, really I wanted to meet you. So I don't know where you are. I wanted to see you once. Okay. Why you are pretty much getting confused, I don't know. Even after this many days also still you are getting confused, means there is a mistake on me. Maybe I have not taken the classes properly. Fine. So meet me once. I wanted to see you. I wanted to make a darshan of yours. Next. Particulars. Purchase of silk yarn. purchase of silk yarn, and it is within the state. So as there is a purchase of silk yarn within the state, so it will come under RCM liability. And what is that? What's the value of the silk yarn? 4 lakhs. So 4 lakhs into 9%, 36,000, 36,000, 36,000, 36,000. IGST dash. Understood, but I get a silly doubt like this. It's okay, but I'm telling you, you should not get, because too many silly doubts only will create a confusion in the exam hall. So weed it out, remove it as soon as possible. Then purchased a new truck, and can we take ITC? Yes, because it is used as raw material. Definitely we can take ITC. So which means it will also go to ITC statement. Particulars, CGST, SGST, IGST. So first we need whatever we pay under GST and RCM, we can take ITC also with respect to this. And it is raw material. So that's why we can take ITC. Purchase of silk yarn, 36,000 CGST and 36,000 SGST. Next, purchased a new truck from a dealer in Cochin, Kerala, for transport of materials. The company claimed depreciation under Income Tax Act on the value of new truck, including all applicable taxes. So it is not taxable under RCM, and ITC is also not available. So it will not come under RCM, but purchase of truck. Generally purchase of truck we can take ITC, but here it is blocked ITC, that is section 16 subsection 3. Depreciation is computed on tax component. Due to that reason, ITC not available. Fee paid to a chartered accountant, Mr. Prashant, registered in Gujarat. Where these people are registered? These people are registered in Maharashtra, so it is interstate. 35,000 for the statutory audit of preceding financial year and 25,000 for certification work. But on this, definitely they can take ITC. We don't have any restriction. So total 2 lakhs. They can take ITC into 18%. So fee paid to chartered accountant, ITC available. Fee to chartered accountant 2 lakhs into 18%, 36,000. 36,000. So CGST, SGST will not come, IGST only. ITC is available with respect to this because he is registered in Gujarat. The company provided the following additional information. Arthovia Limited wishes to choose the most beneficial option in respect of supply to agent, and we chose. Okay. And branch transfer, where we have branch transfer here, we don't have any information. They gave something below. Okay. Arthovia Limited transferred certain taxable items to its Kerala branch from Maharashtra to Kerala for distributing as free samples on the occasion of inauguration of the said branch, which is yet to be registered. Even though it is not registered, it will become a distinct person. Okay. And we need to determine the value under Rule 28. So what is the meaning of distinct person? One registration of a person to their another registration, or unregistered establishment in another state is also distinct person. Value declared in the invoice was 2.5 lakhs, whereas open market value of the same was 3 lakh. Kerala branch has not yet sold such kind of goods to any customer. So we need to take OMV, but remember, if the recipient is eligible for full ITC, value declared invoice is OMV, but the problem is that recipient is not eligible for full ITC because he is not registered. So definitely the open market value only should be taken, 3 lakhs only should be taken. So that is an outward supply. So we need to take it here. Sale to branch, interstate stock transfer, value under Rule 28, 3 lakhs will be taken as it is interstate. Accordingly, IGST will be applicable, so 54,000, CGST, SGST will be nil. And we need to check if there is any other transaction. Rates given, all amounts, no other inward supply, that's it. Now we will do the total. So what is the gross GST payable? And here if you observe, definitely it will not exceed 50 lakhs taxable turnover, and we don't have any exempted turnover. First one is not exempted, zero rated. So no need to do the reversal of ITC. Just analyze the turnover outward supply here. Everywhere it is either taxable or it is zero rated. So that is also treated as taxable, means ITC reversal will not arise. Keep that in mind. Now do the total of GST column. 34,200 plus 10,800, 10,800, 45,000 CGST, 45,000 SGST, then 1,56,960 plus 51,840 plus 54,000, 2,62,800. This is your gross GST payable under FCM. And RCM liability 36,000, and ITC also we got 36,000, 36,000, 36,000 is the ITC. Now what we need to do in this case? First, computation of net GST payable. Computation of net GST payable. What is it? Computation of net GST payable. Particulars: CGST, SGST, IGST. Particulars: CGST, SGST, IGST. In that particulars, first, gross GST payable under FCM. Gross GST under FCM. So it is a gross GST under FCM 45, 45 and 2,62,800. 45, 45, 2,62,800 minus ITC. All the ITCs within the liability. So 36,000, 36,000 and 36,000. Then we need to add RCM liability. RCM liability, that RCM liability 36,000 and 36,000. So you will get net GST payable. Net GST payable, what is it? Net GST payable 45,000, 45,000 and here 2,62,800 minus 36,000, 2,26,800. 2,26,800, that will be the net GST payable. Got it? So let's see the answer for this. Total output tax, minimum GST 45, 45 and 2,26,800. Perfect. So this is the answer for this question. Now we will move on to the next one. Question number 14. This question number 14 is a question related to place of supply, and that too whenever the place of supply advertisement services provided to government, we need to take each state where the advertisement is provided and thereafter it should be apportioned between the states based on viewership data published by BRC last quarter last week, and once we apportion it between the channels, then we need to apportion it between the states based on population census. Related to that they gave, and when it is applicable, advertisement services to government, central government, state government, local authority or statutory body. XYZ, a statutory body, deals with all the advertisement and publicity of government. It has issued a release order to BuzzBox TV channel registered in state A for telecasting an advertisement relating to one of the schemes of the government in the month of September. The advertisement will be telecast in states of A, B, C, D and E, total 5 states. The total value of the service contract entered into between BuzzBox and XYZ is 10 lakhs. Same question we already discussed in place of supply chapter. In our solved workbook it is there. You are required to determine the place of supply of service in the instant case as also the value of supply attributable to state A, B, C, D, E. Further compute the GST liability as also advise it whether it should issue one invoice for the entire contract value or separate state-wise invoices. The other relevant information is as under. So 10 lakhs, first we need to see for which month. This is for the month of September. So as it is September, we need to say the previous quarter. What is the previous quarter? April to June. For the June last week, we have viewership data published by BRC, Broadcast Audience Research Council. What is the ratio? The ratio, if you see, 1:2:1 and total 10 lakhs. So that 10 lakhs, if you divide between state A, that is 1, 2, 3, channel number 1, 2, 3. Channel number 1 will be 10 lakhs into 1 by 4, 2,50,000. 10 lakhs into 2 by 4, 5 lakhs. 10 lakhs into 1 by 4, 2,50,000. Then again, channel number 2 is telecasted in B and C. So for channel A, 2,50,000, no doubt. Channel like state B, the total amount is 5 lakhs. That 5 lakhs, again you will divide it in 9:1 ratio. So 9 by 10, 4,50,000 and 1 by 10, 50,000. Then D and E, we have 2,50,000 that we need to divide in 4 and 1 ratio. So 2,50,000 into 4 by 5, that is 2 lakhs, 2,50,000 into 1 by 5, that is 50,000. So 2,50,000, 4,50,000, 50, 2 lakh and 50,000. This will be taken as the value of supply for each state. The applicable rate of GST as under. So first, where this channel is located, bus box TV, state A. So first case it will be intrastate supply. For state A it will be intrastate supply, and state B, C, D, E it is interstate supply. Whether they have to give one invoice or multiple invoice, as there is a different place of supply and different liabilities, they need to give multiple invoices. That is 5 invoices they need to give. And first case it will be CGST, SGST 9%, 9%, and all other cases it will be IGST 18%. So we need to just show the computation. First we need to write about the provision. So provision, you write section 12, service of IGST Act, advertisement services to government or statutory body, what is the place of supply, then connect it with rule 3 of IGST rules, what should be taken as the place of supply, and thereafter do the statement. First statement you divide it between the channels, second statement you divide it between the states, and finally third statement you do the computation of GST liability, and finally you write that. So as there are multiple place of supplies involved in these transactions, 5 invoices needs to be issued like that. That's the conclusion. Next, Satwa and Associates is a supplier of taxable goods. It has entered into contract to supply a consignment of certain taxable goods. However, since it is unable to determine the value of goods to be supplied by it, it applies for payment of tax on such goods on a provisional basis. So this is a question on provisional assessment. So they are going on a provisional assessment along with the required documents in support of its request. On 12th January, the Assist Commission of Central Tax issues an order allowing payment of tax on provisional basis. But remember, this is not a provisional assessment under customs, it's a provisional assessment under GST. And the amount for which bond is to be executed and security needs to be furnished. Satwa and Associates complies with the same and supplies the goods on 25th January and thereafter paying the tax on provisional basis on 19th February. On 19th February, they are going to pay tax on provisional basis. Logical, because January when they make supply, by 20th they need to pay the provisional tax, and they pay the provisional tax by 20th of February. Consequent to the final assessment order passed by the Assistant Commissioner of Central Tax on 21st March, a tax of 1,80,000 becomes due on the consignment. So 1,80,000 is the differential tax. Satwa and Associates pays the tax due on 9th April, determine the interest payable if any by Satwa and Associates in the above case. So the interest will be from the due date. What is the due date? 20th February till the date on which it is paid, that is 9th April. Don't include 20th February. So that is, in February you take 8 days, March 31 days, April 9 days, so 48 days. For this 48 days, you need to compute interest on what? 1,80,000. 1,80,000 into 18% is the rate of interest. Why 18% is the rate of interest? Because it is GST, not customs. 18% into 48 divided by 365. So that is 1,80,000 into 18% into 48 divided by 365. 4,261 rupees will be taken as interest. I have a problem in reading the question fast. By reading fast, I make mistakes. I am slowly changing myself. Good. You have to, because 3 hours. Now, just imagine there is an enemy who is coming to attack you and you don't have any weapon. He is going to stab you. Now, you have to either duck or go aside so that he will not be able to stab you. There, if you tell, no, patiently I will do, in a rush I cannot do like that, if you say, he will stab you and go, correct? So, you should be like Rajinikanth in movies or Vijay in movie, wherein when someone is shooting, when hero shooting, the villain, definitely the bullet will go. But when the villain is shooting, it will not fall on the hero. Got it? So that much fast you should be. That's what it means. So therefore, you have to, because 3 hours, this big paper, lengthy paper, so you need to read. And when you are reading now, I'll give you one nice tip. Wherever amount is there, date is there, you focus there. Wherever dates and amounts are there, you focus there. Remaining and all, just quickly you can read. Date, amount. And what is the date, what is that amount? If you know that, enough. Okay. So you will be able to do that. Amounts only. Wherever the amount is there and wherever date is there only your focus should be. What if the question is full of theory? Means definitely this is based on something, some application or provision. That you read slowly, no issue. Then, so 4261, and assume that all other facts remain the same if consequent to the final assessment order passed on 21st March, a tax of 4,20,000 become refundable on the consignment. So there is some refund. So refund of which is applied by Satwa Associates on 9th April and tax was refunded to it on 5th June. Determine the interest receivable, if any, by Satwa Associates in the given case. So first, what is the date on which final assessment order is passed? 21st March. And what is the date on which they made application? 9th April, and within 60 days. So 9th April plus 60 days is what you see. So 9th April plus 60 days, that is 30 minus 9, 21 days. In April, May, 31 days, 52 June, so 8th June. By 8th June, whether we are receiving the money? Yes. So no interest. No interest in this case. Why no interest in this case? After application for refund, the refund should be granted within 60 days from the date of application. In this case, the refund is granted within 60 days. If it is a customs provisional assessment, then the final assessment 3 months. Not the date on which you make application. Final assessment plus 3 months. But under GST, after final assessment, you make an application, and after application, within 60 days, if they are not granting, then only. So there is a difference in provision. If the same question is under customs, when the final assessment happened 21st March, 3 months, 21st March to April, May, June, by 21st June, they need to give the refund. If not, interest will come, like that. Okay. But under GST, after final assessment, you need to make application, and after application within 60 days, if they are not granting refund, so then only this interest will be applicable. Okay. So that's the answer for this question. Sir, boating in 13th question, I remember during audit in Kanyakumari, the boating services done by the PSU company, total fee which is collected by that one company was inclusive of GST. The fee was shared by 3 PSU company. The main confusion was that liability to pay GST rests with the collector, or it must also be shared with among themselves. Simple. Whenever there is a sharing, first the person who is receiving will pay GST, and whenever they are sharing, they have to pay GST on their share and they will raise invoice. For example, ABC you take. A will pay GST first. A will pay GST first if A is collecting, and A will give the share to B, share to C. Now B will raise invoice to A and C will raise invoice to A. So B will pay GST on their share, C will pay GST on their share, and they will raise invoice to A, and A will take ITC. This is how logically it should be. Actually, co-insurance also the same logic. But what has happened for co-insurance, they gave a relaxation. If the lead insurer paid GST on the gross premium, the share of premium received by the co-insurer will be excluded from supply, like that they give. But otherwise, if that exclusion from supply is not there, the main insurer will pay GST on the gross premium, and the co-insurers also will pay GST on their share. They will raise invoice to the main insurer, and the main insurer will take ITC. Okay, that's how it will be. Then next, question number 16. Prime Access Limited and Blue Peak Limited, two well-established manufacturing companies registered under GST in the state of Maharashtra, decided to strengthen their market presence by merging their operations. After following due legal procedures, they filed an application for merger before the court. On 22nd May, the court passed an order approving the merger. On 22nd May, the court passed an order approving the merger, stating that it would take effect retrospectively from 1st April. Okay, retrospectively from 1st April. However, an important transaction has already taken place on 15th May, wherein Prime Access supplied a consignment of taxable goods to Blue Peak. That is, 1st April, the merger was effective. But the court has given the order on 22nd May. Meanwhile, one transaction has taken place. This is related to one concept. That is, we have liability to pay GST in special cases in assessment chapter. In that, we have one provision. So, in case of merger, whenever it happens, what is the treatment of that particular merger? Say this. Section 87. Liability in case of amalgamation or merger of two companies. Order of amalgamation or merger passed on a date but effective from an earlier date. So for GST dues, two companies shall be treated as distinct, means not merged, till the date of order. Based on that, they created this question. So whether it will be chargeable to GST? Of course, yes, it will be chargeable to GST. So whenever there is a sale between Prime Access Limited and Blue Peak Limited, it will become supply and it will be chargeable to GST in this case. Okay. So that you need to refer based on section 87. Even though the effective date has happened, but the date on which order is passed is 22nd May. The accountant of Prime Access took the view that no GST was payable on this transaction. According to him, since the merger was effective from 1st April, but both the companies were deemed to be one entity, therefore the transfer of goods on 15 May does not qualify as supply or required to assess the technical veracity. First you write about the section 87. I will show you the answer. First you need to write about section 87, that is a reference. After writing section 87 reference, you need to give the provision. So section 87, you need to write the provision, and after writing the provision, you need to connect in the present case what has happened, and conclusion. Such transaction of supply and receipt shall be included in the turnover of Prime Access and Blue Peak respectively, and they shall be liable to pay tax accordingly if there is any transaction between them. That's the answer for this. Next, question number 17. Briefly illustrate the specific category of services notified under 9.5, the tax on supplies of which is payable by e-commerce operator if such services are supplied through it. Now we have new one, I, that is instant local delivery. I hate. I for instant local delivery if the supplier is not liable to get registered, housekeeping services and accommodation services. Housekeeping services if the supplier is not liable to get registered, accommodation service through e-commerce operator if the supplier is not liable to get registered. Next, T, transportation of passengers by any motor vehicle through e-commerce operator, whether the supplier is liable or not liable to get registered. However, in case of transportation of passengers in omnibus by a company, 9.5 is not applicable. Then supply of food in a restaurant or eating joint through e-commerce operator, whether the supplier is liable to get registered or not. However, if that restaurant is in the specified premises having the value of per day greater than 7,500 rupees, then 9.5 is not applicable. So that is what you need to write in this case. Next. So total 5. I hate. That 5 points you need to write. Next. Question number 18. David Limited is manufacturer of semiconductors in the state of Gujarat. It imported machinery by air from France for making subparts to be used in assembling of semiconductor. The following particulars are furnished by it. CAF value of the machinery $50,000, freight paid air 12,500, insurance charges 2,500. Now Design and patent charges, you are required to compute the assessable value. Please don't do this directly, because design and patent charges was required to be paid in France, which was not included in CIF, which means you need to arrive at the FOB. Why? Air freight is also there. So actual or 20% of FOB which needs to be taken. So what is the FOB? The FOB will be 50,000 minus 12,500 minus 2,500, that is $35,000 is FOB given. And to this FOB given, we need to get the customs FOB. Design and patent charges of $2,000 was required to be paid in France, not in India, outside India, which is not included. So we need to add the design charges, that is $2,000. And after that you will get FOB as per customs, that is $37,000 will be taken as FOB as per customs. To this FOB as per customs, we need to add freight. What is that freight? Actual 12,500 or 20% of FOB. So 37,000 into 20%, 7,400. So we need to take 7,400. Insurance, we will take actual $2,500. Now you will get CIF. So what is the CIF as per customs or assessable value? 37,000 plus 7,400 plus 2,500, $46,900 will be taken. And to this $46,900, we need to multiply the exchange rate. Which exchange rate should be taken? Always bill of entry exchange rate should be taken. So into rupees 80 per dollar. So assessable value in Indian rupees will be, so into 80, that is 37,52,000 will be taken rupees. And you need to write the notes accordingly. For this air freight, what you will take, for insurance, what you will take, this design and development charges, what is the treatment and which exchange rate to be taken, that notes we need to write. So the assessable value will be 37,52,000. Next, question number 19. Super Arc Paper Mills Limited imported 500 tons of bamboo pulp paper rolls on 5th April. 500 tons on 5th April. It warehoused the said rolls in its private bonded warehouse as per the order dated 15th April, permitting deposit of the said goods in warehouse for 5 months. The rate of customs duty applicable on the date of deposit was 5%. Okay, the rate of duty at that time 5%. Understood up to this? 5th April imported, they deposited the goods in the warehouse on 15th April. The warehousing order is 15th April for 5 months. Okay, the rate at the time of deposit was 5%. Super Arc Paper Mills filed an application for extension of warehousing period on 10th September, because 15th April you take 5 months. So May, June, July, August, September, it is over by 15th September. So on 10th September they made, which was rejected. So an ex-bond bill of entry was filed on 4th October after the expiry of warehousing period. So when the warehouse period got expired, warehouse period got expired on 15th of September. Warehouse period got expired on 15th of September. And what is the actual date on which they clear? 4th October. We have one case, Kesoram Rayan case, claiming nil customs duty since the rate of customs duty on bamboo pulp roll was exempted by virtue of an exemption notification with effect from 2nd October valid till 15th October. Now what will be taken as the relevant date for determination of rate of duty? As per Kesoram Rayan case and SPEC Sugars case by Supreme Court, it is held that on expiry of warehousing period, it is deemed that the goods are improperly cleared. So therefore, on that day, what is the rate prevailing? 5% that will be payable. The relevant date for rate of duty is not ex-bond bill of entry in this case. On 17th October, under section 72, a notice has been issued demanding customs duty at 7.5% rate being effective on the date of issuance of notice with interest. You are required to determine the technical veracity of the claim of Super Arc Paper Mills and notice issued by proper officer. So first, we need to tell that as per Kesoram Rayan case, what should be taken? See the answer in which it should be presented. So proper officer may demand full amount of duty if the goods are not cleared within the permissible warehousing period or extension of that permissible warehousing period. Then we need to write about Kesoram Rayan case or SBEC Sugars case by Supreme Court. These are the two landmark judgments. So if the goods are not removed within the permissible warehousing period, on expiry of permissible warehousing period, the goods are improperly cleared. So therefore, in this case, the date of removal, the deemed removal will be 15 September. Accordingly, the rate of duty applicable will be 5%. So department view that 7.5% or this importer view that nil, both are not acceptable. Neither super arc paper mills nor the proper officer is correct. Okay. Next question, question number 20, I think it's last question. Aurex Global Industries Limited imported certain machinery and the customs authorities passed an assessment order determining the duty payable. Aurex Global Industries Limited was of the view that excess duty has been levied due to an incorrect classification adopted in the assessment order. However, Aurex Global Industries paid the duty under protest. They paid. So, first assessment order was passed stating that the rate is wrong and they have to pay, and they paid the duty under protest. Subsequently, company filed refund application. No. Priya Blue Industries case. This is a landmark judgment, Priya Blue Industries case, that is, whenever the assessment order is passed and if they have paid the money, the only way is to go for appeal. But refund is not the alternative to appeal. So they cannot go to appeal, go and make application for refund stating that they have paid the excess duty, because the same officer who passed the assessment order cannot sit on the refund order. So therefore, the correct modus operandi or procedure is that they need to go for appeal. That is that Priya Blue Industries case, Supreme Court decision. So interestingly, this time RTP, 2 landmark judgments they made questions. Okay, and on FTP they did not touch. So say this, Priya Blue Industries case. Okay, so that is also Supreme Court case. Supreme Court ruled that unless an assessment order has been reviewed or modified in an appeal, the assessment order stands. So officer considering the refund cannot review the assessment order. So therefore, refund claim based on challenge to order of assessment is rejected. The appeal should be filed but not the refund claim. Got it? So that is the answer for this. So with this we completed RTP discussion.